folks, Dan Frio here, the rate update. Today we're going to discuss housing permits. How many were just issued? Is that a good sign? Is that a bad sign? So we're going to show you how that's affecting the markets right now, especially mortgage rates. So if you're new to the channel, my name is Dan Frio. I do the rate update every morning to inform you guys everything real estate, especially all your financing options. That is a big piece of the puzzle when you're looking for real estate. So that being said, let's get on to the news. So like we do every morning, let's open up the news and see what's showing up. All right, so this morning, all we really have for today on the economic calendar is building permits. How many were issued? And we come across here and we see that there was more issued than was expected. Okay, is that good news or bad news? Don't know just yet. History will tell us in that area, but I did come across a fantastic website. I'm going to put the description down below. Look at this thing. I always try to find things that help me incorporate everything into one page, or as much as I can, to give you the facts, the data, where it came from, and so forth. This website is what I found. Here it is right here. You can go down through new residential building permits up 0.4% in March. And then they also actually post the link that it was posted on the government website. So you see private owner owned housing units authorized by building permits in March were at a seasonally adjusted annual rate of 1.873 million. This is a 0.4% increase above February's numbers of 1.865. Okay, so that's telling us that there are still a robust amount of houses being built. But the cool thing about this is, and again, I'll post this link down below, it gives you a lot of data. Okay, why I love the data. Okay, it gives us context, it gives us fact-based opinions. I won't even say opinions, it gives us the facts on all the stuff that's going on. So many people are just, they throw out something, or they throw out some numbers, and there's no substance behind it. What I try to do here, my goal is to inform and educate you guys, and then also give you the tools on how to find out or double check me on all this stuff. So that being said, I'll post this video or this link down below so you can check out all the data on this website. But I want to go over how is this affecting the markets. Well, I just posted this newsletter just about 5-10 minutes ago. The market was flat, but it changed really, really fast. So let's get on to why you're here. What's going on with mortgage rates and the mortgage market? So we can see right here, the MBSs are down 31 basis points, okay? So if you're new to the channel, you're like, okay, why are you showing me this? All right, the reason being is this is the biggest instrument or tool or piece of the puzzle when it comes to your mortgage rate. The yield on this bond, okay? It's a bond that trades on Wall Street that it's the biggest piece of your mortgage rate. It's not the federal funds rate. It's not what the Fed's doing. It's not the treasuries. It's not corporate bonds. It is this, okay? So this is the tool that we focus in on. So that being said, when this number goes down like it is here, that means the price of the bond is going down. The bigger this number, the higher the rates are going. So there's an inverse relationship. When you pay less for this bond, it drives up the yield, in this case, your mortgage rate. Let me explain this real quick, and I do this every so often to inform everybody on how this works. How bonds work is this. So again, as the price goes down, the yield goes up. So let me explain it this way. Here's a bond. It's worth $100. Next year, when you turn that bond in, they're going to give you $100. Okay, that's how that works. So today, we pay $100 for that bond. You're like, Dan, why would you do that? Yeah, it's to prove a point. So I pay you $100, and then a year from now, you give me $100 back. What's my yield? Zero. Okay, zero. There's no return. There's no yield. Okay, so that's when I paid a high price. Paid $100 for $100. Now let's drive down that price. So let's say we pay $50 for that bond. So I give you $50 today. A year from now, you give me my bond back for $100. What's my yield when I paid a lower price? 100%. I doubled my money. I gave you $50 and I got $100 back. So the lower the price, the higher the yield. That's how basically bonds 101. That's how all of that works. Now let's get on to how this is correlating over into mortgage rates. Okay, so it's not really doing anything yet because the market's just open. But let me show you. I always tell you guys, I have a ticker that's a little quicker than the one that you have access to because I pay a lot of money for it. All right, so here's the ticker that you see, and here's the ticker that I see. I don't know if you can see that number. Yes, you can. It's 48. So you can see right here, think of this as a stock ticker, and you're like, okay, it's only down 31, but I'm seeing it's down 48. My butt is selling this stuff, and you can see there's nothing but selling, going on down through here. All right, so I just want to show you guys there's different feeds to the MBS market. I have the professional feed, so I get information a little bit quicker than you. Think of this as a stock ticker. Think if you had a stock ticker that was about 5 minutes quicker than what everybody else sees. So when you see a stock going up, 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 you can buy it before the market does. That's exactly what I do with the MBSs. I can see when rates are getting better, I'll hold off. But the one big thing is I can see when they're getting worse, I can jump in and beat the banks from repricing or reissuing a new rate sheet at higher rates. So let's see how this all correlates into mortgage rates, and that's why you are here. So let's go over to the mortgage rates. Where are mortgage rates? Well, that's basically, if you watched my video last night, it's the same because they haven't updated yet. But they will, because we have this number, the 47 minus 47, that needs to roll into this. So we're probably going to see rates going up at least 10 to 15 basis points. So we're going to get closer to 5.5. We're getting there faster than I actually anticipated and most of the industry anticipated. But that being said, let's go over where mortgage rates are. So we start out the day with 30-year fixed rate is up 10 basis points to 5.25. It's coming in at a cost. So if you take this cost out, because the cost is actually buying or prepaying a lot of interest for you, I won't explain that here in this video, but that's how that works. So this rate is more like 5.3, 5.35. Okay, so we're getting close to 5.5. All right, so let's go across the puzzle here. The 15-year fix is up 9 basis points to 4.54. The FHA, VA, USDA, the government packet right here, they're all very, very similar in rates, coming in up 4 basis points to 4.79. The 30-year jumbo is at 4.4, up 5 basis points. And lagging behind is the 5/1 ARM coming in at 4.03, up only 1 basis points. And there's a huge spread between the ARMs right now and the fix. So if you're interested in that, please ask when you call in. The sentiment for today is really negative. It's significantly negative, and you can see that down below here. And the chart over here isn't good news. It's showing that we have the highest rates, as you can see in this chart, than we have for years and years and years. So that is the report for today. I'm not trying to make your day start out as a gloomy day, but the facts are the facts. So if you like my videos and you like our content and you're like, hey, Dan, what exactly do you do? Well, I'm a mortgage broker. I'm one of the largest mortgage brokers in the country, and I service right now about 30 states. We're actually getting into almost every state here soon, and I'll have some updates on that for you there. But if you'd like to reach out to us to find out, how does our extended rate locks work? So if you're building a house and you need a rate lock for 6, 8 months, a year, we got it. Okay, reverse mortgages. We get a lot of reverse mortgage applications. If you're 62 and older and you own your house pretty much outright, and you're just like, I'd like to get rid of my house payment for good, or maybe a line of credit on your house, please check out that. Or what's going on right now is debt consolidation. Consumer debt is skyrocketing. And if you're living off your credit cards, or you have, might make sense to use a lot of the equity in your house that you've gained over the last year or two to pay off those high interest rate credit cards. So God bless, guys. I hope if we can be of any help to you, please reach out to us, 844-775-5626. We have a new chat button right over here, and you can also apply online right over there. So that's it for today. I'll be back later this afternoon with an update to let you guys know where mortgage rates are midday. So thanks for watching. God bless, guys. I'll see you soon. Bye-bye.